faces behind the trades. It finally dawned on me um, what each of the stock shares represent, and what options are, and what ETFs are, and what um, tranches are. Um, when I first traded stocks, I didn't know much about the stock market. And all I knew was from the vantage point of looking at things, when I bought a share, it was an unlimited supply of shares. And I could buy it, and miraculously it went up and it went down for some reason. Now I realize that there is actually a limit to the amount of shares that are available, and that each of those shares has a face. Some of these faces are institutions, some of these faces are professional traders, rare they are, and some of these traders are novice traders, and some of these traders and are traders like myself who fit somewhere between being a pro day trader and very close to a novice day trader. And what seems to happen on a daily basis is the need of the the market, the market to generate income. There are individuals who are employed to earn a salary to a certain degree, and when that occurs, market volatility provides that extreme amount of uh, uh, the salaries of millions of individuals who participate in the financial securities world. When I noticed that if I trade a stock like, let's say, Boeing. Now, Boeing has a limited amount of shares. So if I look at Boeing, Boeing has approximately, so if I look at Boeing, Boeing has a market cap of $93 billion, and current stock price is let's see here. Okay, market cap is that. That means that current market cap is $157. It means roughly about they approximately have a billion, less than a billion shares outstanding. That means that each of those shares are held by individuals or institutions. And so if I look at the fundamentals, so if I look at the holders, who are the holders? So if I look at the holders, shares are held by insiders. So insiders, so 0.1% is held by the insiders. I suppose those are the individuals who work for the company, such as the executives. They hold 0.1% of it. And then percent of share by institutions. Institutions, so roughly about half of it is held by the institutions, which means that it's held and it's most likely locked away. Which means that out of approximately billion shares, approximately about a billion shares that are outstanding, 500 million shares are just held and locked away. So those are not even used. However, out of the overall, the float, percent of float held by institutions is approximately about 58% float, meaning that I suppose what that means is that institutions lends out the shares to other people in remuneration. So approximately about there's approximately about 2,260 institutions that are holding it, and these are the breakdown of so these are like institutional holders and mutual fund holders. So these are locked away. So these are essentially like 401ks. People like you and me. Well, I used to be an engineer, so I used to stow away my money in a 401k plan. It would go to these companies, and they would buy this company for a prolonged period of time where the stock is being held. And so approximately, so if I were to put faces to the the faces behind the trades, it's essentially you and me who are holding it, uh, and putting money into institutions, or it could be a charitable contribution to institutions that are buying it for the purpose of profiting, so that it can be used to generate profits to do charitable work as well. So what's happening is that when the stock uh, is possible that it could be overbought. It's possible. It's possible one institution wants to get in, which means they have like tens of millions of shares they want to buy. So we're talking about $1 billion. If they want to get in, that means that the price will fluctuate above where the attractive price is based on the calculation of the fundamentals. So when the fundamental and the economics are tied together, and then the price elevates higher than what is currently is at a certain point, and what the market condition is providing, and if it's sufficiently big enough, these institutions may unload their shares to another institution who sees a 3 or 4 year or 5 year time horizon where they expect the profits of their investments to increase beyond what they pay. And so there is a careful exchange on a mega level, and that is on a microcosmic level, on levels like mine, where one contract or one share or 100 shares is exchanged on a daily basis is essentially riding on their coattail. So that is why on these mega cap stocks, it's essentially the terminology of catching a knife. Essentially, that's what's happening. When an institution believes that its time and the macroeconomic conditions warrant it within a certain period, and they believe that the other securities are more attractive to them, they may opt to exit a particular stock. At which point, because their holdings are so massive, when they exit, it takes a while for the to become acclimated. At which time the stock may depreciate a significant amount because these are giants, and anytime they would just sap up the demand, because they would soak it up. So the faces behind, essentially, I am essentially a, a, a gnat within a Milky Way, one hydrogen molecule within the Milky Way of influence and the impact that I generate within the market. And therefore, essentially, I don't matter whatsoever. So because my size is so small, the size that I have is so small, it is essentially infinitesimally small, and the faces that I create within this page is essentially it's essentially a massive flood, and it's only a teardrop within that massive flood going in certain directions. And these are the things that the pro day traders and novice traders are attempting to wade through. And it's essentially navigating through a torrential flood and trying to figure out whether I should take the boat down and go with the trend or wade against it and attempt to fight against it. However, most likely a boulder will get dislodged, and then when I walk across through it, and the boulder may cause irreparable damage. And therefore, uh, the faces behind these trades are people like you and me, attempting to figure out what these massive institutions are doing in order to take profit. And when these massive institutions are increasing, just think of it. These massive institutions move because we're talking about exchanges of on a daily volume. The daily volume on a stock like this, as far as Friday is concerned, is 5.7 million shares. 5.7 million shares times roughly about $200. That's about $10 billion. That's about $10 billion. $10 billion are exchanged on a daily basis. $10 billion. And when I buy 100 shares, that's about 1,100. One share is 150, $200. So 10 is 2,000, so roughly about $20,000. And compared to $10 billion, that's essentially very, very small. Now that is essentially the faces behind the Wall Street. And ETFs are a tranche. A tranche. A tranche is a terminology that I picked up in the housing crisis. So ETFs are tranches that reflect the economy of the security. I'm not going to go into detail. So these are the things that people exchange as well. So they do that. So ETFs also have a massive following as well, and certain institutions also latch onto that, and the similar percentage as well. And as long as there's volatility, people like Charles Schwab, who makes money based on brokerage fees, tends to increase because people tend to trade more during volatile times. When the stock market is just riding sideways, flat, nobody exchanges stocks. There's no fees, and nobody makes a wage. No, and the earnings are smaller. And so that that essentially is those are the faces of the securities market. And there is a government who oversees it, and the number of employees fluctuates based on the complexity of the stock market as well. So these are essentially breaking down the world that I'm currently living in and attempting to see based on what the market situation is, to tell me what the direction of certain issues are going, so that I can make the right decisions at the right amount of trades, so that I can make money. What a fascinating world this is.